Charlie Munger is not the only legendary investor who's bullish on Alibaba. As you'll see in this clip, which comes from a full interview with Wealthtrack, legendary investor Bill Miller describes why he's bullish on Alibaba.
Alibaba, just speaking of a company that has come under scrutiny in its home market in China, has been, certainly the stock price has been affected by that and regulation from the Chinese authorities. And yet you continue to own it in a fairly sizable position in it. Why?
Yeah, we bought a chunk of it when all of the stories broke about Jack Ma, and he disappeared for a while. There's still stories every day. There's a story today about the common prosperity that President Xi wants, and the new regulations for things like DD and gig workers, and all of that is real. We don't know how far that's going to go, but right now the market price, in my opinion, fully reflects that in Alibaba, for example, because it trades now about 15 times the next 12 months earnings. And we think the company's growth is going to slow, but it would be surprising to us if over the next 3 years they couldn't grow at least 15% a year, generate a lot of cash, still have a dominant market position.
How do you deal with these political uncertainties?
There's a couple aspects to that. The first one is we really try and understand, based on what we know now, about what the economic impact of those measures will have on these companies. So how will it affect their earnings growth? I mean, Alibaba was growing 25% a year, 30% a year for a long time, and now it's going to be growing a lot less than that. But again, that's now reflected in the price. And then the other part of it, might have said, or if I didn't, I should have said that since the financial crisis, people have been volatility and risk phobic, and so wherever they see perceived risk, they flee from it because of the experience of the losses in the great financial crisis, 08 and 09. So our default position is that people will overestimate perceived risk, and the real risk tends to be much less. And especially when there's a lot of headline risk about these companies. We had a big position in Facebook some years ago when Mark Zuckerberg was dragged before Congress, and we went over to see clients over in Europe, and they asked us about it. And one of the things that we said, well, what are your other managers doing? And he said, well, they're all getting rid of it. And that turned out to be, that week of it turned out to be the bottom, and then Facebook's price. So Alibaba was 300 a year ago, and now it's 120. So that come down reduces a lot of risk in that name and other names in that space.